Mark Twain said that history doesn't repeat, but it often rhymes. And will we see what we saw last year after the Fed failed to lower the Fed funds rate? And we had a jobs report immediately following that. That was not a very good one. We are seeing the exact same thing this year. So, ditto, absolutely the same. So we're going to get into that here in a second. But what's going on this week that's going to move the market economically? Well, there are a lot of economic things going on. We had one of the Fed governors quit, and the head of the BLS was fired. So that has some impact, although that is more short term, not really going to move the needle that much. And this week, actually, there's not a lot going on economically. We have really not much on Monday. Tuesday, we have a 3-year Treasury note auction, an ISM non-manufacturing report. Wednesday, we have a 10-year Treasury auction, which will be pretty big. Thursday, we have the Bank of England makes their Fed fund equivalent decision. Are they going to raise or lower their rates? And then the big thing I think on Thursday is going to be continuing jobless claims. Will we hit 2 million people with continuing unemployment insurance claims? That's the big one right there. So let's take a look at what I'm talking about with the deja vu thing. Where we're at right now as we start the week, conventional 6.63 to 6.75. VA, we're right around 6.24. So we broke below the 6.25. No thanks to the Fed. I think we'd be closer to 6% if the Fed had lowered the Fed funds rate, but they didn't. But it was that jobs report, that 73,000 new jobs, well below the 115,000 that was expected. And then unemployment going up to 4.2% from 4.1%. Let's take a look at last year this time. Right? If you look at this chart, last year this time we were at about 6.2% on VA, and then Fed did not lower the Fed funds rate. Fed kept it the same. We had a bad jobs report, and then you can see steadily all through August, interest rates dropped. The lowest they dropped was down in mid-September. All right, we got down to 5.66. Why? Because continuing economic news showed that the Fed should have lowered the Fed funds rate, and they did. And then they started to go up really right when the Fed made their decision to lower the Fed funds rate in September. So will we see that again? When we see rates come down, all right, if we could get rates down into that, under 6% range, I think it's going to free up a lot of buyers to get out there, start looking again. I think the seller credits are still going to remain, but again, that remains to be seen. We have possibly a month and a half of opportunity for rates to come down, and that will allow more people to buy, more people to refi, and as people sell, then they'll have an opportunity to buy on the back end too. Again, lots of inventory, especially in Oahu. So we'll see what happens, but this could be a really, really big week, really big month and a half for interest rates, and we'll keep you up to speed. All right, that's all I have for you right now. Have a great week. Aloha.